All right, family. Welcome to the David Carmena Show. You know, this show, guys, I say a lot of times that it is super important to grow your top line, the top line of your company, but it is just as important to well, let's back up a little bit. Grow your top line means grow your revenue to a company, but it is super important also to maintain that you keep what you've made. And what that means is taxes. You want to make sure that you pay your fair share, but as little of taxes as possible as a entrepreneur. So you say, "Wow, David, okay, taxes. That is not sexy. That is not something that is, I want to worry about. I'm not going to worry about my taxes. I'm just going to keep growing my revenue." And then you get this end of the year, you get this tax bill, and you be like, "Hold up. It is something that you do not want to pay to Uncle Sam." Well, today, fellas, I got your back. I got your back. I have a tax attorney. Fellas, look, listen to me. I have a tax attorney that is not only will save you money, save that bag, but she can also, hey, the only one that can do your taxes and win a Miss Beauty contest at the same time. This lady has been in the game 2 decades. She owns her own shop, Tax Pros of Tampa. Fella, she's a lawyer. So she has the credentials, the brains, the beauty. She can probably whip my ass too, so she probably have the bronze. I'm going to bring her up. I want her to give us the top few things that as an entrepreneur we should be thinking about, the top few tips, 3 or 4 tips that as an entrepreneur we should be thinking about for saving as much money as we can and being legal. There are a lot of people out there that have run into problems over time. Historically, has run into problems with taxes. They figure that they don't need to pay taxes, or if they pay taxes, they think that it is something that is optional. And then you hear these stories about these guys losing millions and millions and millions of dollars for not filing taxes or getting into other IRS problems. Well, we want to save that. We want to save you some money today. We want to save the IRS knocking on your door. Hey, can I see your tax returns for the last 5 years? We want to save that. And as an entrepreneur, we need to make sure that rule number 1, stay in business. Rule number 2, look at rule number 1. We have to stay in business. That means that we have to do all of the ethical business things that entrepreneurs do. And one of that is pay your people and pay taxes. So without further ado, I'm going to bring up Michelle James. Michelle.
Hello, David.
How you doing?
I'm good, thank you. How about yourself?
I'm doing well. Now, somebody told me you're going to save me some money. Somebody told me, a little birdie told me that you are the lady to save money.
I've been known to have some tricks of the trade, absolutely.
Now, give us a little bit of your history, a little bit about your background, your expertise, and what have you been doing for the last 2 decades?
I started about 25 years ago in the accounting field, worked my way up to partnership in a CPA firm in Wall Street. And there I handled all our small emerging businesses. So the firm had all different focuses, and my focus was our small emerging businesses generating up to 15 million. From there, I got you ready for banking. I got you ready for funding. I got you ready for acquisitions, selling, whatever that position is that you needed to be in. That was my job. I needed to get you prepared for that.
And this is while you were still in New York.
Yes.
Okay.
And about 12 years ago, I moved to Tampa Bay. And I restarted all over. I had to start all over from a bad divorce. It was difficult trying to keep that partnership there in New York. And so I got to Tampa and I started to wonder, where do I go from here? And I ended up opening up a tax franchise. And so I did that for about 2 years. And then I spun off and went back into private practice, helping small businesses minimizing their tax responsibilities.
And now you are a. I just want to make sure that you are a tax attorney. So not only do you know the practical side, but you know the legal side associated with maintaining and protecting wealth.
Correct. Correct. I have been practicing for about 10 years as an attorney, focusing in tax law, international as well as US based. And that's my focus. My focus is, tell me what it is that you are trying to obtain over the next 3 to 5 years, and I will set that plan for you and help you to get there and give you all the guidance that you need.
Tax attorneys, is that Tax Pro? I'm sorry, of Tampa. That is, you're able to not only handle all of the state of Florida, but can you handle outside of the state?
Yes, I can. So my license is not state; it's federal. It's on
Okay. So anywhere, anyone can reach out to you.
Absolutely.
All right. So I'm going to give you a scenario. Now I know that we talked about some of the things that are backstage. We talked about some of the guys that are in the news now, but I don't want to talk about that tonight. What I want to talk about is the average guy. Not the one that has hundreds of millions of dollars that they're trying to protect and not lose, but you're an entrepreneur. You have, let's say, five people that work for you, 5 employees, maybe a couple of 1099 people, and you have a revenue of $800 to $1 million. How can I say, what am I looking at? What am I looking at that, I know I should have come to you last year. I know that. But what are there any top things in them that, can be done now that I should be looking for, or how can I better position myself moving forward?
So, David, one of the biggest issues is we are not choosing the right tax classifications for our entities that we're creating. And I know that Google lends a lot to, to giving you information and providing you a platform to think that you know it all and can do it all and should do it all. However, what it doesn't give you is the information you already don't know. And an LLC that is not set up correctly can put you in a bad tax bracket. And when I say that, LLCs in their natural form, without any elections filed, is recognized as what the IRS call a disregarded entity. And a disregarded entity is subjected to self-employment taxes. Now, as self-employed individuals, we don't need to pay that tax. Well, how do we avoid it? Well, we avoid it by making an election to be recognized, preferred as an S Corp. And the reason I choose an S Corp, as there are other pass-through entities, but the reason I choose the S Corp, it's my preference, is the laws with the S Corp, because it's a new platform, it's not as restricted right now with the IRS. Yes, you do have a bunch of rules and regulations that you need to follow. One of them, you have to have your basis all set up, or else you can't take the deduction. Just things that if you were to walk into a tax office, they just would not know all the different things to kind of help you there. And so the biggest issue I see is small businesses not having the right tax classification. An S Corp to me is ideal. And I've heard many myths. Oh, someone said you have to make a certain amount. Someone said this. It's all not true. And I say, take yourself as the individual and speak to an expert and find out just exactly how you should be set up, and not listen to how your friend is set up and, your partners are set up. It just doesn't work.
So first, I'm going to unpack it a little bit because I want to make sure that everyone that's here understands. Okay, so an S corp, and you want to form an LLC first, and so you mentioned that, and I know that I can come to someone like you to form an LLC for me. Is that something that you recommend that someone try to do it? Grab a YouTube channel and how to form an LLC and then go at it, or do you really need to have a professional kind of help you and guide you through the process?
So my answer may be quite biased. However, I think at a certain point, when you decide to get in business and you decide to go out and get loans and you decide to max your credit cards and use your savings and exhaust your 401ks and borrow money from family, why are you also not getting the professional advice that you need? Why shortcut the process and go on Google? Why not consult with someone? Within an hour, you can figure out probably everything that you need to figure out whether or not this would be the route you'd want to go. So for me, I think you should, if you are seriously in business and you have something here to lose, right? I think if you're putting up your money and you can't lose it, going back to working for someone is not an option for you, then I think you need to start it out correctly by making sure you have all the right players on your team.
Yeah. Yeah, I agree with you. When I have kind of like an intricate holding company scenario, and you definitely need to have. I seeked out a lawyer to help me through that process, and like you said, you're saving in the just the taxes alone. Potentially, you can save the cost of having a professional set up everything for you.
Absolutely. Absolutely. And I see errors every day, and you feel so bad for people who are in business, and sometimes they do choose an accountant and it's not the right accountant. So, I know some people are like, I paid someone to do it and it still wasn't right, because I've seen many of those returns that I've had to amend. But the likelihood of you getting bad direction all throughout is less likely. You might find someone that's not quite the risk taker when it comes on, and that's because they don't necessarily understand the tax laws, and so they play really, really safe with you. And safe is, you give me what you have and I'm going to file the tax return, and we're not going to do much from there. Whereas if I do the return and I see you have a major liability, it's time for us to talk, because I want to figure out what else do you have going on, because chances are we're just missing something. And during that conversation is when I figure out, you may tell me, oh yeah, my 19-year-old is in college right now. Well, maybe we should go ahead and put them on payroll. You give them an allowance, correct? What are some of the things that we can now do to start reducing your tax liability and still keep your money, right? At the end of the day, you're still in control. You have deferred income. You have several different things that you can do to kind of hold on to that money that we are making. But I believe that takes you having a relationship with someone that understands your financial resources wholeheartedly. I'm married. There'll be a different advice if you said to me, I make, $100,000 a year and I'm trying to buy a rental property. I'd say, okay, great. You tell me you're making $150,000 a year and you're trying to buy a rental property. I'd tell you that's not a good idea. So again, it's not a good idea, because at a certain point you start to phase out on those credits, and buying them personally in your name, you are now not going to get the benefit of having a rental property.
but also the liability. I mean,
And
someone
the
has
liability.
someone has to slip and fall, and then they can attach everything you own to the
The
to
liability,
the lawsuit, right?
or just even having multiple properties in one LLC. That's
Hmm.
something that I give advice again that you should not be doing. Can it be done? Absolutely. Should you do it? No.
Yeah.
You go out there. It's a very litigious. It's very litigious out there these days. Everybody's looking for a lawsuit and a quick come up. Well, how do you protect yourself?
Yeah, there was a situation. I guess his name. Let's say his name was Paul, and Paul was selling, 7 properties, and someone called me and said, David, here are some properties that Paul is selling, and I'm looking into it, and I said, wow, these are really good properties at a really good, fairly decent rate. I kind of knew the area already, and it was in popular areas. Um, and yeah, I was, I hate to say it, but I was wondering, why would someone sell his portfolio? He had seven people in 7 properties in this particular portfolio. And why would he be selling this? Come to find out, Paul was in a situation where he needed, um someone was I don't want to get too detailed, but someone was going after that particular LLC. And
Mm.
because, just to your point, because he had all of his properties in this one LLC, then he stood to lose everything, in that particular LLC. So this guy has been investing 15 years or so, and didn't come to someone like you, or another trusted advisor. Someone's been in the game a while, and he I don't know if he went to YouTube or some other place, but someone advised him, I guess, that it was okay to put all all your eggs in one basket. And then when someone steal a basket, then you're out of everything.
Right.
I don't. I'm.
And here's the thing: you get a strong enough lawyer, it doesn't matter that you try to dissolve that. If the case is already started, they're coming. They're still coming after you. You know. So
So what
dissolve.
happens? I'm just curious. What happens if and it didn't happen to Paul, but let's say what happens to someone who, same situation, and they sell all of their properties before the, I guess, the second trial date, or they try to push it off, and at some point during the process has started, and at some point during before the judgment, the final judgment, he was able to liquidate everything. Can they come after the buyer of the property and
Not the
try to claw
buyer,
that back?
the seller, the person that liquidated it, the one that the seller, they can
Mm-hmm.
certainly still come after the seller, even though they've liquidated. Um, and you see it all the time. You get yourself into these situations, and you can't run from it, right? Because
Right.
a part of the liquidation is it's almost illegal at that point once you've entered into a lawsuit, right? So they'll tell you, yeah, the likelihood, though, would it work out more in your favor if you've liquidated? Possibly, because through the liquidation, now you're only recognizing the gains, and gains, you can kind of minimize that, right?
Right. Right.
Any kind of exchanges that you do, related parties would certainly void certain coverage that you would have, which means, oh, I sold it to my daughter,
Mm, mm.
right? Related party transactions could certainly be an issue. But, if they wholeheartedly just sold out to the regular public, he might have a better opportunity at minimizing his loss.
All right. So, fellas, before we go any further, this is not legal advice. Even though she's a lawyer and a beautiful one, she is not giving you legal advice. You got to book a consultation with her, and then maybe you can enter into something like that. But this is not legal advice. Don't sue a brother. I ain't got no money. I ain't got it. I ain't got it like that. I ain't got look, don't I ain't got it like that. So if you want to if you want to contact her directly, you can Google Tax Pros of Tampa,
Mhm.
and there's contact information. But then also before we leave, make sure you give me your primary contact information, so anyone who want to reach out to you will have the opportunity to do that.
Absolutely. It is Tax Pro of Tampa. The number is 813.
Hold on a second. Let me see if we can do this here. Okay, 813.
813-831-6100. And it is Tax Pro of Tampa. And we are here to provide business advisory services. We provide bookkeeping, tax preparation, corporates, and individuals. We do payroll. So we're a full service boutique firm ready to service your need. We do business evaluation. So if you're looking to sell that business and you don't know quite what it's valued at, we certainly will help with that process. And, I always think, and again, might be biased, but I think you need to have good players on your team if you're trying to play in this game out here called life. I'm certainly not in the business to lose money. And, I know a lot of people are, like you were stating, you have to show your income. It's what makes you credit worthy out there. It's what allows you to get the loans and to buy the properties and to kind of excel. But if so if you're in business to do business, I certainly would love to assist if you ever needed my advice.
So I didn't know you did payroll also, huh?
Yes, full service firm.
Wow, that's interesting. This really is. So and you are an investor yourself. You
I am
actually invest in the market. Mm-hmm.
in the market. I invest in the market. I have real estate. I have group homes, ALFs, outside of my tax practice. Yes.
Because a lot of people, they're professionals, and they're professionals in a field, but I think it's a unique situation when you are investing. You are an entrepreneur. You are out there, risking, and it takes a certain amount of person to have that level of risk. Most safe people are not investors. I
Correct.
found, you know, most people that is risk averse are the people who teach, and not the player.
I agree. So it's not for everybody. If they're not taking home a check, and that's cool because everybody can't be out here playing the game either. So, but there are some people they have to have that W-2. They're not going to come out here and risk everything that they have. But I have been one of those persons ever since I, was old enough. I've been self-employed, and I have stepped in and out the corporate world, but for different reasons. For me, it's the experience. It's to have it on your resume. It's to, to see how Wall Street does it. Because I have done, your publicly traded companies. I've worked for them. And so for me, it's all about the experience, but it was never my thing. Like to sit at somebody's desk is not my thing.
So when you were in New York, it was really to gain experience in the field, and you didn't really think of that as a retirement type of plan there, right? Is that what you're saying?
No, I don't know if I'm from Jamaica.
Okay.
And I don't know if you knew that, but I think when I first visited Florida years ago with a women's retreat, I was like, wow, I think I could live there.
Mm-hmm.
That place this place, it reminds me of home. And New York just doesn't do that for me.
Right, right.
I made my money, I did my thing, but it just didn't do it for me.
Yeah, yeah, I get it. I get it. When I was growing up, I lived in Italy. I was actually in the military, and for 2 years, a little bit over 2 years or so, I was in Naples, Italy. Even though I was in the Navy, the funny thing is that I never went to sea. The system that I worked on was so sensitive that it couldn't float. It was strictly, in a one of these buildings under, air conditioning and no movement, that type of thing. And every time when I go to Puerto Rico, which is my going home type of feel, where I want to live ultimately, I feel that. I feel like, wow, it reminds me of Italy, but warmer. I love warm weather. I love being out on the beach. I take off my suit, and you never know. I'm a different person.
Right.
But I just love Puerto Rico. Does it for me.
Yeah.
And
I love this place. And listen, I said, I can make money wherever I'm at. So, and I've always had that position. I was like, you give me a minute. I was kind of knocked off my game a little bit when I left New York. And I was like, you just give me a second because I'm going to get back on this horse and I'm going to ride it.
so you got hustle. You got that hustle in you.
I got that hustle in me.
That's the thing. Jamaicans, you got like
And
5,
that's
10 jobs.
Jamaicans got 3 jobs. It
You got
is
that
so
hustle.
true.
And part of that is being an entrepreneur. I call my guys. I always say sign off on my show saying stay grinding. You got to have that grind.
You
No
gotta
one's
have
gonna
it.
give it to you. Nobody gonna give it to you.
And 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 David, you have to put it in to get it. Like you can't, you know, another thing that I see our small businesses do, they don't know what it takes to do your break even. How do you not know your break even? How many houses you need to sell? How many widgets do you need to sell? How much money do you need to make in a month to make sure you don't go back to working for someone else? Understand your numbers and know them. And if you don't know them, you work with someone to help you there. So you jump out of business and you're trying to do it and it's not going to happen. It's
Also, the
just
level of effort. It's not a 9 to 5. You
right.
know, it is not a 9 to 5. And so I think that forming, like you said, having an LLC and then the LLC designated as an S corp, correct?
Absolutely.
That's step one. And if I do that, I'm in a different tax bracket.
Absolutely. So the S Corp is what we call a pass through
Hmm.
entity. And that simply means it has no tax rates attached to it. It takes all your income and it takes all your expenses and it then passes it through to its owners. Now, depending on what else you may have, coming in, that's what kind of determines your tax rate or your tax bracket. But typically, coming in from a K1, which is what the S Corp would issue to you, is a K1, which is what I call, our owner's W-2. You don't pay any taxes on it, but you need that statement for you to go file your tax return. And with that, you would have avoided that self-employment tax of 7.65%, which is the reason why a lot of small businesses don't want to show income. It's that same self-employment tax that kills them. As soon as they put $1,000 on the tax return that they made it, they're now paying 15.3% in self-employment taxes. Well, who can afford that? Right? Let's now make that 10,000. And all of a sudden your tax bill becomes unmanageable. And so, everybody gets into the practice of let's zero out the return. Let's zero out the return. And then the pandemic hit and nobody could get any money because all the returns were zero.
Yeah, the bank gonna want to know you made some money.
Absolutely. And that it's through that you really have to know what it is that you're doing. And if you are in an S corp, you will see a huge difference first year in your tax liability. first year, first go. Um, it is a tax return that is due by March 15th of every year. So it is due 30 days before your personal return is due, and you cannot file your personal before you file your corporate. Um, One of the other rules are you have to run a payroll on your S corp in order to stay in alignment with the IRS and their rules and regulations. And outside of that, I mean, it is free reign on that S corp. Of course, no commingling of funds. Commingling on every level voids your liability protection. Okay.
So the running a payroll, if you're the only person that, let's say you have a company that has, you're the only one on payroll, or you have no payroll, you have 1099 people all over the place. What is the scenario there?
So for me, I would always at least put my owner
Mm-hmm.
on the payroll. And I mean, even if I do it minimum, it could be $300 a week. It doesn't really matter what that payroll needs to be. But as long as we are abiding by the guidelines of the S corp, one of them has to be payroll. And, we could do it, $5,000 for the whole year. Let's say you're brand new at this and we're now approaching the end of the year. There's no minimum that you need to actually file that payroll as long as you start that process. Of course, they say payroll is fair wages. The problem is if the S corp isn't making the money, they also understand that you're just doing it to stay in alliance and in accordance with the rules.
Awesome. So if you are what about if you had a situation where you've pre-pandemic, because we talked about the pandemic, and you made a couple of $100,000, and then the pandemic, over the years you made less and less. Can you amend the 1 year that you made a lot of money and kind of spread it out over a few more years, or is there anything that you can do in that situation?
No, unfortunately not. You can't really, you have to recognize the income in the year that it is earned. So you can't really do that, but there were quite a bit of pandemic credits for people who lost income in those years. So not only the tax stimuluses that we received, but if you were missing and you were out because maybe a family member had COVID, or because you yourself was sick, there are some tax credits that are out there that you are still able to get if you did file.
Okay. What is the next tip? So I got my S corp there. I have I did my LLC, and so I think that you were leaning more toward an LLC than an Inc., a corporation.
Absolutely. So on the LLC, it's your limited liability, and as small entities, we really don't need to be INCs, right? Our companies that are in corporations are Google and these big entities out here where you're able to take on mounds of investors and you are publicly traded, and this is where you get that dollar for dollar, where they have the double taxation and different things like that. So I don't typically advise anyone to really take that position unless you had a real reason. And if you come and you say, well, the reason is this, S corps can probably pretty much do whatever it is that you're looking to do, because if you said I'm looking for investors, well, the S corp allows that too.
Mm-hmm.
And some will say, well, I want to do it like that because I don't want anyone to know who I am. Well, you have to decide if that 35% tax bracket is worth that. So you have to kind of weigh it. Like, is it really that important that you hide your identity and setting up a company? And as you know, in the state of Florida, it doesn't really matter. It all goes on SunBiz. And most of the other states are doing the same thing. It's just a matter of, typing in the name, and all your information is online.
Right. So for the average investor, Uh, Probably an LLC or multiple LLCs would probably do the case. You know, I know a lot of investors. What they do is they would put a LLC for a particular project, if it's a larger project, or have like one or two um, rental incomes or residual incomes in a particular LLC, and they would just have multiple LLCs. We had a guy, a company, actually last month. They bought in Ybor. I'm sorry, in David on Davis Island. They they bought a land, a home. Really, the home was primarily used for they're gonna tear it down and build something, one of those Mac mansions on it. They bought it for $1 million, $950,000. And then when I looked up the company, they must have had 8 to 10 different LLCs that are
Mm.
offshoot on that main name. And so it looks like what they would do is buy several several properties under a LLC, and then just start another one. Is that something that is probably recommended, or are you looking at some other way of kind of managing your properties? And they would had a combination of, they would hold some, and looks like they're going to, for this particular property, they're going to sell. I know for sure they're going to build and sell that particular one. Is there any strategy, or what's your thoughts on that strategy by a company like that?
So my recommendation is one entity to an LLC, and again for liability reasons, and that's the legal side of me, right?
Mm-hmm.
There is someone else. There's just too much paperwork. It's, I don't want to have all these different entities. I don't want to file all these different tax returns, and and so they'll start piling them up under the one LLC. Certainly not my recommendation. And if they are doing that, maybe they're not holding the property as long. So they're okay with just kind of flipping them within the
Mm-hmm.
LLC.
Right.
And so that strategy may very well work because that's all they're doing with it. They're just buying and flipping, right? You're buying and flipping, and that's not holding. And that may very well work for them.
Yeah, I think that's what they were doing here, is that they would buy a property and then flip it. But some of these times, especially for developments, it may take 8 months to a little bit over a year for from concept to ground to selling the home. So I would imagine that they wouldn't want to keep too many properties in that LLC, and that may be the reason why after so many properties they would just roll. The next one they buy would be in a different LLC. Is kind of what I'm thinking.
Yeah, I'm pretty sure I'm pretty sure that that's what they're doing, right? Typically when you start talking, I do find that it's funny because I do find that real estate investors are typically some of the first ones to seek legal help or tax help. And that's awesome, right? Because your investment is coming in strong, and if you don't have all the right things in place, you're going to lose the deduction either way. I can't tell you how many properties. I mean, I I met a doctor a couple of months ago, and he had like 3 or 4 rental properties in his name. And he's like, I just pay so much in taxes, and I have all these properties, and I just don't know. I spend so much money upgrading. It's your income. Without your
And not
setup,
deducting anything, huh?
yeah, your income has exceeded the thresholds for you to take the real estate deduction. And so, I positioned him a little bit differently.
Mm-hmm.
I set him up in an a LLC, and we kind of
Oh, he was
started.
buying it in his own name.
Huh?
Everything was in his own name.
Yes. Yes, about 3 or 4 homes, and we started shifting some of those titles, and for those that had loans, we had to do something a little different for them because
Right.
you can't really put a mortgage, something with a mortgage in an LLC, unless that's how you originally purchased it. The bank doesn't like you shifting the ownership like that. But yeah,
Oh, you mean you're not going to do a quick claim deed and cross your fingers? You, Pray. Oh, I hope they don't catch me.
And
Oh.
pray the bank don't catch you. And ask for all their money right away.
I want it all back now.
And you're like, what? I didn't know that. Yeah, it was one of the 30 pages you signed when you closed.
Yeah, those escalation clauses can be difficult.
Absolutely.
So you do things the right way. So that's good. That's good.
You have to. You know, if you're trying to be in this game to win it, you can't take the shortcuts.
You're right.
Right? The
You're right.
shortcuts get you in trouble. You know, you can't take the shortcuts. You actually have to be focused on what it is that you're going after, know what it is, or else you will go in the wrong direction. You know, you're out here and you're just, oh, I'm just moving. And the next thing you know, well, it was just all wrong because that was never the direction you were set to go anyway.
Right. Right.
You know, so you have to be focused and intentional.
So most of do you do regular people, or most of your people are investors or entrepreneurs or business owners?
No, I actually have clients, you know, making 40,000 all the way up. And
That would be me. 40, 15,
all the way up.
20,000.
You know, and you know, as long as I see, you know, my clients, especially in business, if I see them starting out, I like to work with them from the start, because if I find out what it is that you're trying to do, I feel we can get there together, you know. And so I kind of give them lessons as they're going. We'll work
Now,
on
I
this
also
first
know
quarter.
that
Huh?
you do very high net worth individuals. I know that for a fact.
Right.
So a lot of people think that minority businesses, they have a capacity issue, or they can't, do the very high net worth individuals. And a lot of times that people come in, they want to work with someone they like, know, and trust, right? But they feel that they're not capable of handling a $5 million man, a $10 million man, or something like that. Your firm, in conjunction with some other people that are associated, that you work with as a part of your extended team, you guys can handle very high net worth people.
Correct. We handle athletes, performers, investors, you name it. We don't really have a max on how much money you need to make to come over here, right? As long as I can come up with a strategy for you, we are all right.
So that's awesome, because at some point, I would imagine that unless you are purposeful, because there's a diminishing return of working with smaller clients, a lot of people use that as a justification to work with the super rich, or the up and coming athlete, as you mentioned, or up and coming performer. And then your expertise is not really available for the average mom and pop type of business, or someone who is making a teacher's salary, or a cop, or a nurse, even though nurses are getting paid now, or the average person. I guess the median income in Tampa for the Black and brown community is 30 something thousand, 36,000 ish or so. And for single, I don't know how single moms, I don't know how they do it. I really don't.
But I think I have something for everybody. What you won't get is me trying to figure out a tax strategy for you, but we certainly give you guidance regardless of whatever your income level is when you do come in. We don't really turn anyone away, that wants to come in. You may never see my face, but I am still here. And the moment you get into an intricate situation, I am called in on that particular tax return. For instance, someone inheriting a home, or selling a home, or something just pops up really intricate, but they've just been, they were a teacher, so it's not like they had money all along. But as long as those intricate situations come into play, I certainly jump in and assist.
Okay, awesome. All right, so we have the tax corp. That's one. You're going to give me three things that we should think about. We have the S corp. What would be number two?
Number two, uh, I think if you have, and I don't want to call it necessarily disposable income, but understand that deferred income allows you to reduce your tax liability while keeping it. It's just in another bucket. Uh, so take advantage of those deferred comp programs. For instance, especially being a small business owner,
Mhm.
right? If I believe the the amount to deposit is about $52,000 that you can defer as a small business owner. If you've got that type of cash sitting around, why are we paying taxes on it? Why are we not putting it in a vehicle and taking advantage of the deferred um, vehicle, right? And people aren't doing that. They're not, that we so just want to hold our money and see it under the mattress, or see it in the bank account. We don't want to put it in another type of vehicle. But just being self-employed, what is your exit strategy? Right. And so you start building on that. The person that goes to work every day hopefully has a 401k, and they have pensions. Well, what are we doing?
Right.
We're sitting here just scrounging up every year, and we're not putting away for our future. So I think that's a great vehicle for minimizing your tax liability and putting money away for the future.
What are some of the deferred incomes that you recommend? Deferred vehicles that you recommend?
Definitely SEPs for our small businesses. Of course, you have your 401ks. I'm
Mhm.
not a big lover of the 529, which is the student, but they did change the rules where now they'll allow that if you did not use the funds for school, you are able to kind of still take it out and use it. So that's been a great plus. But for me, your 401ks, your Roth, your SEPs, take advantage of those things that are out there.
Self-directed RAs too, right? Is something
It's
that
also
you
another
recommend?
one, definitely another one. And I think I go with the SEPs because they allow you a larger amount,
Hmm.
especially for the small business owners. And you're making some money, and you just go ahead, put your spouse on your business, and you give him half of that, and you take the other half, and now you're saving double that, right? It's just it's what you're doing.
No, they on their own. They are on their
They're on their
own.
own.
They look. I'm taking it with me. What do you think about like prenups and stuff like that from a tax advantage? We talked about spouses. We talked about
Uh, I think
because for men, and it's one of those things that men, and I know that my audience is 70%, almost 80% male. One of the things that we're concerned about is you get into a relationship, you build up your income, or you get a couple. Let's say you have you mentioned exit plan. Exit plan for investors is probably heavily based on residual income properties, residual income projects, whether you're buying single family, multifamily, a hotel, something like that. You're building something, a real estate component, and then you're getting residual from it, right? That is the exit strategy that most investors kind of do. Or they buy a business, build the business up, have somebody run the business, and now that business is paying them, you know, shout out to Bill Gates, style, or Basil style, where they're brand ambassador type of thing. You build all that up. You got your girl come on, and you meet somebody out there. You've been networking with this person. You find her attractive and him attractive, and no judgment zone here. And they come on board, and you scared. You're scared that you're gonna lose half of
you
your
should
stuff.
be.
What's your
You should be. you know, um, I would have to say, if I was to ever get in the game, or had to get back in that game again, yes, whoever I get with would have to sign a prenup. because women and men alike, they're.
Cash you out.
Yeah.
They cash you out. You look at you look at social media and you see, especially you mentioned athletes and rappers and people that make that kind of fast disposable money. They run into these certain types of ladies and men, because hey, look at some of the men that's been taken. Look at Halle Berry crying on Instagram because old boy wanted, he wanted it. He wanted to cash her out.
It's happening on both realms these days.
Absolutely.
I'll tell you, my ex-husband, like I would always say, he put more out the back door than I could ever bring in the front. And that's typically what we would say about our females, right? You would say that about your spouse. That's usually in the reverse, but I'm telling you, it happens in every relationship at this point, male or female. We have to be a bit more diligent about how we secure those things that we've worked hard to gain.
Absolutely. So, what are and I know this is difficult for you to say because you don't know what the prenup look like, but in general, if you have a prenup that says, and let's make some assumptions here that it is upheld by the courts, right? And old girl came in, let's say I have $3 million of net worth or whatever that is. Old girl came in, I generated another $2 million. So I'm now a $5 million net worth guy, right? I don't have shit liquid. I don't have nothing liquid, nothing. I don't, but I can touch, I can go to a property. I go somewhere and, on somebody's balance sheet, that's what I'm worth. Now, old girl comes in and you was at 3, now you at 5, but you have a prenup in place where you say, hey, listen, if you do me wrong, you get something fair. If I do you wrong, you still get something fair. How does that look from a tax standpoint?
From a tax standpoint, anything that, it's kind of like alimony, right? There was a time when alimony was deductible for the person giving it. Now you don't get the deduction. It's kind of recognized just like child support. So now you don't even get a deduction, but the person receiving it still has to pay income on that. So I would definitely say if your prenup is in place, understand that whoever is receiving some of that, make sure it is through, of course, if you have a prenup, hopefully a lawyer is involved, and you make sure that that's being recognized as you paying out so that hopefully you can claim some of those losses.
So the person who is receiving I'm not sure what is it when you pay the other person, is that called an award or whatever?
Yes, you're awarding them, and so hopefully you can get that for them to recognize some taxes and feel some pain.
Well, I wasn't talking about feeling pain. Well, good Lord, I want you on my side. If that ever happened to me, I'm gonna, hey, listen, I know who to go to. I want you to just dig it in there
all the way.
I wasn't talking about pain, but what I was talking about is she would have to declare what she is awarded on her taxes, or that person, right?
Correct.
And I would have a break as a loss. Would that be a loss on my taxes?
So that would depend on how you actually, if you had to maybe sell property,
mm-hmm.
If you had to liquidate some things, then yes, then that's how that it would determine how you report it at that point.
So so if I had to sell property and receive would it be better for me to, because it would not be getting a profit from that sale, but the profit from that sale is going to go to her potentially, right?
Correct.
So wouldn't it be better just to kind of, quit claim it or get it in her name without selling it?
Yes, if that's definitely one of the options, then yes. If whatever that property is worth, it's going to be the total payout, then that would be ideal. But, let's say you had to liquidate it because you had to give them a portion of it.
Mm.
Then that's a little different.
Wow. So the capital gains that I potentially could have received from that, I'm getting, well, I tell you, my prenup better be super tight because
Right.
I'm getting hit from the capital gains, but then I got to pay taxes on gains that I'm giving to another party.
It's no different than giving up your pension, right? These people that, they've been married for so long, and, at the end, they're having to split pensions.
Yeah. But I can see that. That's fair, though. That's fair. That's fair. When I first started in the real estate game, me and my girl, we did it together, and we bought it in our first property was in Miami. Never thought it would be something that I wanted to do. I was playing golf. I sold my first company. I was playing golf, and I had the opportunity to help someone out in Miami. This was before the crash, so it's about 12, 13, 14 years ago. And the over time we built up properties, and when we broke up, we kind of splitted it 50-50.
Okay.
And so I'm a firm believer that if you just do the right thing with people, then whatever happens, and it'll be, you'll get that good karma back because you treated that person correctly.
Absolutely.
So with this prenup deal, I mean, we're not talking about, I know that some people men can use it, or the person in charge, whether it's male or female, can use it as a hammer against the other person. But a lot of times that can double back on you if you don't execute it correctly, is what I'm hearing.
Yes.
But we need somebody. We need somebody like you in my corner, because I'm going to say, hey, listen, Michelle, hey, I'm taking out the gloves, or kid gloves are off. We bare knuckle in this bad boy.
Right. You better be nice when you're leaving.
One of my friends, the lead attorney, shout out lead attorney, he says that, especially when it comes to divorce, and he's primarily a child custody attorney. What's the family attorney, and deal with child custody cases primarily, right? Divorces and who handles the child. Said that you got to treat these ladies like men. I mean, you guys can get ruthless, I need somebody on my side that is not as nice as I am. I'm a nice guy.
You're too nice.
I'm too nice. So we have S corps. We have a retirement plan, an exit strategy. We talked about the 401ks, the IRAs. We talked about, and then I threw in real estate, residual income, properties or opportunities as an exit strategy. We talked about prenup. What's the last one that you would suggest that we do to maintain our wealth in 2023?
I would say, quarterly, look at your position. You cannot wait until the end of the year. The damage is already done. You have to visit your situation quarterly. And once you do that, you then are positioned to win this game come the end of the year. But if you're waiting until the end of the year and then all you're coming in, you're like, oh, Michelle, here's everything that I've done, and this is what I've got. It's already done. There's nothing I can really do but to file what you've handed me. Talk to someone. If you're selling, if quarterly, review it with a professional is what I would say. I don't think it costs that much. My bill rate is $250 per hour. I don't think it's ridiculous. If you sit on the phone with me for an hour to 2 hours a quarter. So if you're out here and you're trying to develop a strategy, let's do that together. Don't make any major moves without that person in your corner kind of telling you how to go about doing so.
What about 10 minutes? So can you help a brother in 10
Can I
minutes?
have 10 minutes?
I, I'll be I'll be having a stopwatch, right? you be hearing the alarm go ding. Oh, I gotta call you back. I'll call you back next quarter.
I gotta get off the phone.
I gotta go. Yeah, I'll call you back next quarter. Remember this. Let's record this conversation because I'll pick it up next quarter. Okay. That doesn't work. That doesn't work.
Not quite. But if you're looking to, to buy a vehicle, if you're looking to buy a home, if you're talk to someone so that you are not already just jumping in and doing it, and you're doing it the right way.
So really, we talked about earlier about forming the LLCs and your corporate structure, whether as an Inc. or what you don't recommend, or LLCs, that type of thing. I would imagine that initial consultation, is worth the $250, just by having your do's and don'ts, get you on the phone and say, hey Michelle, what do you think about this? And then you say, you do a lot of small talk and you kind of weave in, and then you say, okay, let's start the clock. Let's start the clock. Michelle, I'm not calling for me. It's my friend. My friend is going to be starting an LLC that's called David Carmena. We happen to have the same name, but it's not for me. It's for my friend. And would that work?
So I typically give a 15 to 20-minute consult for no charge. I say to the person, take advantage of it. I will review your tax return with you. I will discuss some things with you. And whatever you walk away with is what you have really brought to the table. So if you just get on the phone and you've given me nothing to look at, it's going to be a very general conversation.
Mm-hmm.
All right. Oh, yeah. Well, I have a job. Yep. Mm-hmm. And a wife. Yeah. And 2 kids. Okay. That does nothing for me.
That does not. You and everybody else, huh?
Give me a tax return and let me look at it.
Mm-hmm.
And once they sit there and they give you that tax return and you can review it, I can come in and say, listen, you're missing this credit. You could have done things this way. This, I'm telling you, isn't doing you any good. I just met a client. He had a $70,000 tax bill. He's like, Michelle, I don't even understand what all these real estate that I own. And I took one look at one of his corporate returns and there were no bases set up. And he's like, what? I was like, you don't have a basis set up. You can't take the deduction. And you leave yourself so open when you don't know what it is that you're doing. You're just out here running and just doing things. So I think it is important to, take the time to just let somebody look at what you've got going on, because I can tell you why it's not working. I could look at a tax return and within 5-10 minutes, blow the whole thing up and just tell you what's going on and how you need to fix it.
Wow. We have Jess talk about it. Jess saying hi, showing support. Thank you, Jess. Thank you for showing support.
Thank you.
Jess, we are talking with Michelle James. Michelle James is a 20 plus year expert. She is a lawyer, tax attorney, as well as the owner of Tax Pros of Tampa. If you have any questions, put it in the chat. I know that it's tax season. She bills $250 an hour. I got about 5 more minutes with it because I know that bill is coming. So anyone out there like the show, if you're out there, and if you have any questions, feel free to put in the chat, and then we'll get Michelle to address it if she's able to. Remember, this is even though she's a licensed attorney, I don't think this is not considered legal advice or anything like that.
Not. Thank you for the disclaimer.
I want to make sure we both do. I don't know what make sure we both do.
Michelle said.
That's right. I don't want nothing. I don't know no part of nothing.
What?
No loss of nothing.
I said no such thing.
I'll be deleting this bad boy, this tape with the quickness. You ain't getting nothing. I ain't got nothing. I just already talked about my prenup. I'm giving up nothing.
Absolutely.
we you really have to, like you said, look at the books on a quarterly basis. They can call you. I'm gonna put up your information again because I think that to really to have someone, I know people that are not as credentialed as you are, and definitely not as accessible as you are, trying to garner these crazy weight rates. I feel that what you're for your experience, what you're offering is more than fair. So I appreciate that, and to have someone that can call you up for 15 minutes to kind of talk about it is another way of really reaching back out into, because I would imagine you got a diverse client, but most of the time it's the minority businesses, black and brown type of businesses, I would imagine.
I do have quite a bit of, I have a very mixed clientele actually.
Hmm.
But yes, if sometimes we don't like to spend money with each other.
That's a shame.
It's
That
such
is
a
really
shame,
a shame.
right? Because I'm out here giving all the good advice to our counterparts.
Hmm.
So it is such a shame. But I can't tell you how many millions of dollars I got my white counterparts out there during COVID. Because I was able to go in and position them to go in and get these SBAs and these grants and all these different things that they were handing out.
Yeah.
But because, we're just so, I don't want her to know how much I make. Do you really think I even, do you know how many tax returns come across my desk? I don't think about what you make and where you are after I put that return down. And it's because it's not about that for me. I'm not sitting here going, oh yeah, he made it. It's never that. This is a job for me, and I want to do the best thing that's for you. And this isn't about what you make. What you've got on paper isn't what you've got. It's what you got on paper, right?
I
So
ain't got I ain't, look, I ain't got nothing I ain't got nothing to say about what that, I ain't got nothing, no,
what I got
but
on paper isn't everything I got.
commercial, as one of my friends would say. But I real talk, I'm gonna have this year 2023, I'm gonna have we're gonna talk about you guys taking over some of this stuff that we're doing, and see we can do something.
Absolutely. I look forward
Mhm.
to it.
I want to hit because we're right at the hour mark, and I want to make sure that if you have any questions out there from Michelle, guys, feel free to put it in the chat. But just to recap, you need an S corp. Really need to have, and what that means extendedly is that you need to have your paperwork in order, right? The LLC setup, I heard about the corporate veil and that type of thing, and setting up the S corp and making sure that you have your meetings on time and all this other stuff. And that's something that I would imagine that you would give some initial advice during the setup process, if they would have you help them with that, or you and your team. We talked about the 401k. Well, really an exit strategy here, whether you're putting your income in 401ks, RAs. I personally added to this a investment property that is generating some type of residual income. I personally, I think that even though I'm going to diversify a little bit more, we have some friends with Preston and others and Raymond James that I'm going to look at diversifying some of my stuff. But that's kind of your exit strategy there. Fellas and ladies, we talked about prenups and really protecting yourself in the breakup phase. A lot of things, you start off great and sweet and sour, and they end up kind of sour. So if you are a person that, and I was going to say, Michelle, I was going to say if you're a high net worth person, but you don't know if you are going to be a high net worth person
That is
starting
true.
out.
And the other thing I was just going to add, David, is they need to have contracts. Stop with the handshaking. Put it in writing. Things go sour all the time, especially when it involves money, and and initially it's all sweet. It's just like a relationship, right? It's all good until it goes bad.
Right.
And that's with any type of partnership. So I think it's important that you get a contract together.
And that's another unique advantage about having that legal side of your business. You're able to advise, even if you don't do it yourself, you kind of can give counsel, a little counsel, and refer that person to an expert
I
that will
do. I
handle that.
advise and I review. I advise, I review, and I actually write depending on the contract, So let's say somebody tells me they're entering into a public shopping center.
Mm-hmm.
I'll say, let me take a look at your lease.
Mm-hmm.
I certainly don't have an issue just kind of reviewing your leases and the things that kind of make you responsible contractually.
Mm-hmm.
I certainly assist with that.
And I know for sure, because we working on a deal together, full transparency of a high net worth individual, and we're setting up a 1031 exchange and some other trust type of stuff through our team. So 1031 exchanges, you can really speak to that as well.
A 1031 exchange is exchanging a like kind property for the same like kind property, I mean rental income for rental income. So it needs to be the same like kind property, and the IRS allows you to defer the gain. So you won't have to recognize any gains on selling and turning around and rebuying. Now there's certainly a bunch of rules that goes with that, even in a very strict time frame. So you have to be, again, intentional. If you are trying to do a 1031, you have to be intentional.
Mm-hmm.
Because you have a matter of weeks to get the transaction completed from start to finish. But, again, there are so many ways out here that we can save on our money. And like you said, they'll come to me at the end of the year and they're like, yeah, I sold it. And then, I bought this one. And you're like, oh, okay. Right. Yeah. And now the next thing you know, I'm having to recognize the capital gains on this one. And then you're like, well, what am I going to do about this one? I said, what you want me to do about it? The only thing I could probably take off of this is the seller's cost, right? I can't do anything with that, So again, they kind of go out and they kind of make those decisions. And then by the time they come, they're like, oh yeah, I've sold it. And I went ahead and I bought something else. And,
Yeah. And that happens a lot. It happened to me a couple of years back. I mean, I was buying and selling. You forgot, kind of forgot. You made some money, but you used that money immediately for another property.
Right.
And so it is. And I want to make sure that we put this out there. This is not for flippers. 1031 exchange, as you mentioned, is that for rental income properties. So it's not for someone who is going to buy, add value through rehabbing and then sell immediately. It's for the buy and hold people, right? That are using that property to have that residual income we talked about. Is a rental property.
Yes, it's definitely preferred that way because the deadlines are quite stringent on it. So, right. And it has to be a like kind property. Yeah. Commercial for commercial, rental for rental. It has to be a like kind property.
And as Michelle said, you have 45 days to identify and 180 days to 6 months to actually close on the property. Mm-hmm. All right. And then we talked about looking at your books, looking at the books on a quarterly basis. Is there have your tax professional look at it with you, I would imagine, because you don't know what you don't know. You don't know what's been changed or an opportunity that a professional may have read about and it's a new deduction and you didn't take advantage of it. Because I know that there are, a lot of renewable energy deductions and that are out there and programs dealing with that, from the Build Back Better bill. And the Inflation Reduction bill that recently was passed into law, and some other things that are out there. but you're the expert, so you would be on top of all of that. And business owners like us, that's one thing was having a nice an expert that can help you out is you can advise of best ways that we can save as much money on the taxes as we can.
Absolutely. And how are we operating and not paying attention? How do you know if what you're charging or what the cost is actually is working, right?
Mm-hmm.
How are you out here, even in the flipping of the houses? Do you really know how much money you are putting into these property? Are you budgeting? Are you on track? Versus your sale price and interest rates and, contractors and supplies. And, so to me, you should not be operating in the blind,
Mm-hmm.
no matter what you do.
Mm-hmm.
While we out here selling, like at the end of the year, if I said, well, the price that's increased here, but you never increased yours. Your rent went up, but you never changed anything else about your cost, right? Everything else was going up, but you never adjusted your costs because
Right.
you're scared people are going to, leave or not want it, but you don't really have a choice. Your bottom line is too tight or, zeroing out.
Right.
Um,
Right.
and those are
Right.
those quarterly conversations you need to be having.
Right. All right. So I think that we definitely have one question coming in. It said, I think that we answered it. Want to know how to get in contact with you. And I'm going to put up your information.
Thank you.
And again, Tax Pro of Tampa, your phone number is there. And the best way to do it is just to call you up
It's to
and
call
ask for an initial
also visit the
consultation.
website.
Mm-hmm.
The website will have a link. You can make an appointment directly from there. As long as my calendar is open, we'll confirm the appointment. If not, we'll suggest another date or time.
Awesome. I want to thank you. I appreciate you coming in, talking about a lot of people are very apprehensive about, taxes and best way to save. And really need someone like you on their team. They really do,
Thank
because you would have someone that can really advise. And the tip that you give or the program that you suggest is the cost of maybe in savings more than the cost of the services.
Always. What I save you will way outweigh what my cost is. Absolutely. There's no doubt in that. That's been proven time and time again.
Well, again, thank you for coming on to the show. I know that we have. Hopefully, I'll see you Friday at an event that we're going to, as well as some other. I'll bring you onto the show, and hopefully you can shed some light on these recent events of individuals potentially losing a life's work worth of money. And it's just a shame that we get out here, we struggle so hard to get out and make it out of our environments. In most cases, our environments are not the best. And we get to that point and, we do something to ruin all of that, or we don't prepare for, look at Mike Tyson and some of these other people losing, 30 million, 300 million, whatever that number is, and having to at 56-year-old, he may love the game, but I'm sure he don't want to take the brutal aspect of his sport to get out there to make money, or you want to have in place a strategy so that you do have that exit plan. You can, live the happy life and that type of thing.
Absolutely.
How many years you got left, lady, before you call it quits? Before you go back to Jamaica? Actually, you said Florida. Florida is your spot.
Florida is my spot. I'm thinking I might be in it for about another 10 years, maybe.
I didn't realize that Florida was home until maybe a couple of years ago. I always thought that, I'll kind of go to Atlanta or some other place, but Florida's home, and it's changing so much.
Florida is home for me.
How many locations do you have?
What
for Tax Pro? Mm-hmm. For which bit?
I
I
was like,
know. I'm not talking about your investments.
what's the other stuff?
You're gonna get these guys cashing you out. Then we talking about. You're gonna be like Haley. Hey, he's a, you know.
Currently, I am actually in transition, moving one of my offices from the Southdale Mabry area over to Trinity.
Mm-hmm.
So I'll be over in that Wesley Chapel, Trinity area pretty soon. But either way, we've made ourselves completely virtual if you needed us to do that. Because I do, deal with clients that are out of state, sometimes out of the country. So you can reach me regardless wherever. But our new office will be in the Trinity area.
That's awesome. So they can just upload their stuff to a portal or something like that.
A portal for that, yes.
Yeah, and then you good. So she can handle anybody that's in the United States. As one thing that's nice is that being an investor and having multiple properties that she is currently invested in, as well as that legal side, that legal mind. She's a lawyer. I think that again, Michelle, you are uniquely positioned to really help us. And again, I want to thank you for coming on to the show. And I really appreciate you, and I'll see you next time.
Thank you, David.
All right, and there we have it, guys. You heard it from the expert. There are four key things that to take advantage of. We talked about establishing your S corp. We talked about the IRAs, the 401ks, that exit strategy piece. We talked about protecting yourself with a prenup, because guess what? Your relationships is unfortunately, I hate to say it, guys, but it's the truth. Men, especially high value men, you stand to lose so much in the breakup divorce process, that you got to protect yourself. You got to protect yourself. And then we talked about, lastly, looking at your books, knowing your numbers, looking at your books with a trusted advisor for 4 times a year, every quarter, so that you make sure that you're right on the correct path. So at the end of the year, there's no surprises. Well, guys, as always, I want to thank you guys for coming on to the show, and, stay grinding. Salute. I'll see you next time.